Days ago, we sat in a room full of business owners learning how to prepare a company for private equity investment or sale. And by the end of it, there were some really great takeaways, some really great speakers, some really insightful nuggets for business owners, for investors when thinking about their own businesses. But by the end of it, we both realized, I think we turned to each other and we kind of jotted a couple things down and we said, the principles that were brought forward about how to prepare your business for sale or for investment, or if you're investing in a business and you want to choose a business and you're going to be being assisted in that, or how do you go down those pathways? Like the principles that were unpacked in this seminar were very much in parallel to what we've been talking about lately about our Canadian business owner and investor wealth planning system, which is our 4 stages that we've been working with our clients on and talking about here on the podcast, on the 4 stages, the 4 phases that we need to think about, plan for, structure around for optimal wealth and achieving your financial freedom numbers. And so in this episode, what we want to do is unpack those parallels between preparing your business for sale or for investing in businesses and how they relate to those 4 stages of the wealth, an efficient wealth planning system. And so that's what we're going to dig into today, right, Kyle?
Absolutely. Absolutely. And, I really appreciated the time. And actually, one of the event organizers from PE Gate was there and was one of the speakers as well. And we're hoping to have a collaboration coming up with them on the Canadian Wealth Secrets podcast coming up soon. But one of the speakers on this panel had said, you can't sell chaos. And, that was the moment where we both sort of looked at each other and thought, like, this all is the same. And if you really think about it, sure, they were talking about selling a business, but think about other aspects of your life. We might not be needing to sell our wealth plan, but it's definitely one where if there's chaos going in our own personal or corporate financial journey, if there is chaos going on there, it's a tough thing to sell to somebody else to say, hey, like, come and join me in doing something like this, right? People want it to be orderly. They want it to be organized. They said, if your systems aren't dialed in, you'll leave millions on the table. And that line right there says it all, because if we're looking at our own personal or corporate wealth journey and there aren't systems, there isn't organization, there isn't clarity around what it is we're trying to do. And we don't mean that eventually one day I want to retire, or eventually one day I want to, quote unquote, only work if I want to work. Like, I think we all generally would like that, but that is not clear. That is not, what's the path look like to help you get there? And whether it's selling a business where I want to, sell this business for a certain amount of money one day, or whether it's I want to just be financially free to a point where I can decide if today I want to do something work-wise, charity-wise, or just, entertainment and maybe relaxation-wise. It really all comes down to being clear on what that is. And here's the troubling part. It's scary, right? Because I think a lot of us don't know exactly what that looks like. So we're going to be walking through some of what we feel we walked away with. We always talk about these epiphanies, right? And it was sort of like we had this epiphany that, our wealth building system that we utilize with business owners and with investors, we call it the Canadian Business Owner and Investor Wealth System. There's 4 stages or 4 phases here. And the epiphanies we had really centered around the first and the third stage. And what we want to do is make some sort of parallels between both. And we've already dug into the first one here, which is around the vision. So, John, tell me more. And like, how does it relate to someone who may be trying to maybe sell a business and also their vision for their own wealth journey?
Yeah. So just a quick recap. The 4 stages are: stage 1 is vision and financial freedom. Stage 2 in the wealth, the business owner and investor wealth planning system, is establishing your corporate or your wealth reservoir, which is your emergency fund, your opportunity fund. Stage 3 is optimizing structure, optimizing the available containers and structures you have available to optimize for tax purposes or for cash flow purposes in your life. So this is an important component. And then the 4th stage is legacy planning and estate planning. and thinking about those next level moves, those next pieces. And those are the four things we just need to like make sure every healthy wealth planning system in your personal life or in your business has to plan for each of four of those things. So in today, like what Kyle's saying is that the parallels are in all four when you're thinking about, say, succession planning in business or investing in business, whether you're a private equity investor or whether you're going to sell to private equity or just sell to, say, the next owner and you want to leave the business. We want to talk about our takeaways specifically on stage 1 and stage 3. So stage 1 being the vision for financial freedom, and how that relates to, say, preparing your business for sale down the line is which is really like defining your exit or defining like where you want to see equity come into your business and sell pieces of your business, whether it's like I want to sell a certain stake at this time and later on, and I'm trying to maybe gain some cash flow to do that, and I'm willing to like talk about those things or go down those avenues. I think it's like what you said about that kind of, you can't sell chaos. It's like you have to be clear on, in both of these scenarios, whether it's your personal side, your corporate, financial system, you have to start thinking about like, what do I want 5 years to look like? What do I want 10 years to look like? Oftentimes we think we're doing good moves or we're doing the right thing, but we haven't clarified what the end result is going to be. We often talk about like, hey, I want to sell this asset, or I want to all of a sudden like go over here, but like, okay, so what are you going to do with, like, say, that chunk of change, or what are you going to do with, like, if you get that, like, how does it help you reach your 30-year goals, 20-year goals, 10-year goals, 5-year goals? Like, a lot of times we just say the goal is to be free, but we haven't really mapped out what that actually is in our own personal side or our business side. The same is true when you're going to, say, sell your business. Like, am I fully exiting this business? What am I going to be doing after that? How do I want to make sure that exit is like seamless? Like, we have to be planning for these things. We have to have a very clear picture of what that process looks like and where do you want to go next, or what this end result actually is, because you can't make decisions now without knowing that, because they affect your decision. It affects what pathway you want to go down. Like, you might all of a sudden be like, well, I could have been made this decision over here, but all the roads are going to lead to some spot, but that spot will be right for everyone, but you haven't clarified where you're trying to go.
Right, right. And, I see some parallels to, our real estate investors who sometimes might not think of themselves as business owners, but you really are when you think about it and you go to sell or buy a property. If that property is not at its best use, right? If we have not seen that property turned around, rents have been raised, they've, done some renovations, they've beautified the building, they've done all of this work in that particular property, you can't expect to get the same price for that property. And of course, you would never buy the property for what its best use price point would be, right? So the same is true in our businesses. And the hard part in a business is that it's not as easily repeatable as in real estate. In real estate, it's all the same business, right? You go in, you buy the property, you find ways that you can improve the value, you can raise the rents, you can do whatever it is you need to do to try to get expenses down and try to get profits up. And then you might be rewarded if you want to go ahead and sell that business. Well, the same is true here in any other business. And one of the key pieces that I think people struggle with is that their vision for why they want to eventually sell their business is because it's a lot of work. And that right there is sort of a big indicator that we probably haven't done enough thinking about what does this pathway look like if I truly want to sell the business for any real amount of money. Because if you think of it another way, really, if you've grown a business where you earn a large portion of your income directly by the actions that you're taking in the business, you've just created yourself a T4 job. And just like when you retire from a company that you worked for as a salaried employee or an hourly employee, guess what? You don't get to sell your position to somebody else. You leave. And the same is true in a lot of businesses when we're small business owners where, I've got a business that does not operate well without me there. Or if I'm on the beach somewhere and my phone won't stop ringing off the hook, you have to really pause for a second and take a step back to think, who in their right mind would want to pay me to do what I'm doing right now. Now, somebody might be willing to take it over for you with no money out of pocket, but they won't want to actually pay you for it. So really, we have to start being clear about what the purpose is for. And then if you get to a place where you're able to sell, usually the value of that business is only there, just like with the rental property, if we've done all the work in order to get those systems in place where someone goes, you know what, that looks like a great business that can be scaled based on the systems that I see there. And this is one of the biggest challenges that we have, because guess what? It's a lot of work to do that planning. And if you're so in the business that you can't be thinking about the business, then this is a huge roadblock for folks. And guess what? We're just sort of tying into this first stage of our wealth planning system, which is all around vision and knowing what it is that we're trying to build here.
For sure. For sure. And I know you had a quote that I don't know if you want to chat about that quote right now before we move on to the third stage, because you brought this up the other day specifically.
Yeah,
Go for it.
what pops into my mind, and I think about this again, that when we see these connections in all aspects of our life, you could think about it from just how you live your life when you get up in the morning, on a personal level, with your family, in a business, in investing. It doesn't matter where, but in Outwitting the Devil, this is a Napoleon Hill book, a great book. I know that Think and Grow Rich is sort of there, Napoleon Hill's sort of like, flagstone. Everybody knows it. Everyone's read it. Well, you should read Outwitting the Devil. And they define this thing, they call it a drifter, and that the vast majority of people drift through life. And when we talk about that and you think about it, think about your own experience in how you got to where you are now. Like, you probably drifted to where you are. Why? Based on the experiences you had, the people you hung out with, right? You're the average of the 5 people you hang around with the most. You sort of drifted through, and along the way, you may have made certain choices. One, for investors or business owners, is to maybe do something a little bit different. Well, he says, drifting without aim or purpose is the first cause of failure. Without a plan for life, concentrated effort, and persistent activity, you will have no means of controlling your own destiny. And if you really think about that, again, business owners, investors, folks that are just trying to do something a little bit more with more intentionality on a personal level, like, really what you're doing is you're trying to figure out, how can I do less drifting? I bet you it's almost impossible to not, allow yourself to drift a little bit in life in different aspects. But how do we do less drifting and do things with more aim and more purpose, so that we have control of that outcome? Because if I'm selling in 5 years or 10 years and I'm not doing that work now, I can almost guarantee you're going to be disappointed. It's not going to look the way you had maybe hoped and prayed for. So let's do something more than hoping and praying.
Yeah. Now I'm going to read the second part of that quote, because I think it ties directly into where we're going to go next, which is jumping the second stage, which was our, establishing our corporate and personal wealth reservoirs, and how that's tied to making sure your balance sheet, your working capital, like all of these things are tip top. But we're going to jump that because we want to talk about the parallels in the stage 3, which is about systems. And so in that quote, the second part says, without a plan for life, concentrated effort, and persistent activity, you'll have no means of controlling your own destiny. And when we talk about persistent activity, we often ask the questions like, well, what activity? Like, what does that look like? What does that sound like? And I feel like that's where stage 3 parallels right now are coming in between, like, optimizing our wealth plans and our structures with ensuring that our business is actually operating efficiently and doing the right things, because that's how you prepare the business for sale. You have to prove that this business actually is this, like, standalone operational component that just moves and chugs along. Otherwise, you've got a lot of risk, because maybe you have key man risk, and you don't want to have that if you're going to sell. You can get a lot more multiple by eliminating some of the key man risk in your business. So when I think about stage 3, we have to say, like, what are the structures, the systems, the persistent activity that we want to focus on to actually make the machine operate in the right way? So personally, if you think about the personal side, it's like, okay, if I have my income is coming in, what am I doing with the inputs to optimize so that I actually achieve the output, which was your stage 1 goals? And how do I use the puzzle pieces, the components of this machine, the levers. Like what are these things that I actually put into motion to create the outputs, and how do I use them efficiently? Like what structures am I using personally? Like am I taking these inputs and maximizing the use of my RRSPs? Am I maximizing the use of my tax-free savings accounts? Am I maximizing the use of other structures that I could be utilizing for tax purposes? Oftentimes we've talked a lot about whole life policies as a structure and a pass-through structure for optimizing tax efficiency, but also wealth planning and legacy. Like, are we using these structures efficiently to achieve the outcome? And so there's a lot of optimization that has to happen personally when we do that. Thinking business wise, that's like the machine. We have like, how is this business operating as a machine so that I could pass it on easily? Are these pieces moving? Like when every dollar comes into my business and I've got a dollar of retained earnings after the operational expenses are covered and all these other commitments are there, what am I doing with that dollar? Am I actually is it like we talked to a lot of business owners that day, and it was like they were just dumping it back into the business just to keep things moving. But it's like, well, is that dollar actually optimized so that you're building assets? Because like you could put it back into like, oh, I don't want it to go to tax, so how do we use it here so that I can like optimize my tax? Isn't that optimization, guys? And we're like, well, it depends. Like if it's going into be an expense that's actually not towards building an asset, it might be a wasted expense.
Right. There was a great example that they had used. They said, you run across these, and this is a gentleman on the buy side of the private equity firms, right? So on the buy side, they were saying, they go into a company and they look and they just got a brand new fleet of vans for, if it's an HVAC company or whatever the company is, they just spent all this money. But at the end of the day, it's like what you just did is you sort of just gifted a brand new fleet of vans to the new borrower or the new buyer, because those vans actually don't help your bottom line at all. Right? No. Those vans, now you need a van. If the van doesn't work anymore, then sure, you need to replace. But oftentimes what you see happening is, just like you said, if we don't have intentionality behind each dollar that comes through the door, when I send that dollar off and I send it off to do something, I need to make sure that not only do I know what that dollar is going to do, so buy the van, let's say, but I also need to have some sort of metric in mind as to like, what am I going to get back for that dollar? And if the answer is, I don't know, then it's probably we need to pump the brakes here and we need to go, what is my goal for this dollar? Because it shouldn't just be to pay less tax, right? I'll tell you that much. Taking a dollar and keeping a portion of that dollar is a lot better than losing the entire dollar just because I didn't want to lose some of it to tax. So really having a purpose for those dollars, I think, is so key. And here's one of the nuances that makes this really hard. Is that oftentimes we get on this, they talk about it for content creators. You get on the content treadmill. Well, the same is true in the business where you're just on this treadmill of trying to grow and scale, but you don't have the clarity and you don't have the real plan in mind as to how this is going to work. You're now using hope and pray. And here's the problem. Every dollar that we commit to do a thing that we don't know the outcome on, we're basically gambling. So we're taking that dollar, we're throwing it on a penny stock basically, and hoping that it'll hit. When at the end of the day, what ends up happening is people come back and they want to sell their business, and then it becomes a real problem for them because they haven't taken care of giving that dollar a real job. If that dollar if I can't predictably know that it's going to do something of benefit in my business, I should be redirecting it to other assets so that I can protect myself should I struggle to sell, should I not be able to work anymore, should the business go away, because basically I've got all of my worth, all of my net worth, all of my investing dollars are tied up in this one business that is requiring me to be there to keep it going.
Yeah, like on the way I think we look at it now, and why I say now is because I think this has changed over the years, is that we are saying every dollar should have two uses, at least two uses. And if we can only find one use, then maybe let's pause and figure out where's the second use so that I actually maximize that dollar. You're doing this on both sides of the corporate border, right? Like you're saying personally, when I have income coming in, how do I get two uses of that dollar? Like, can I invest that dollar, or can I put it in this structure over here and then all of a sudden reuse it over here? Like we've talked about, like the Smith maneuver on the personal side was a great way of getting two uses of the same dollar. Using your whole life policy as the pass-through structure was a great strategy and structure to get two uses of the same dollar. It's growing passively over here at a certain rate, but then you get to reinvest it in a certain asset. On the business side, you're doing the same type of thing as, like we're saying, like I could go buy those vans, but I could also go, could I put it here, like to first and then buy those vans? Or could I, buying those vans, does that actually build something that is an asset? So on the business side, like this is where we've, I think, shifted over the last few years, is to say like, okay, I have an expense that I have to pay $1 for. It's maybe I have to train this employee, or maybe I have to say buy this piece of equipment. But if and this is the key thing, is like we use like an if then how kind of framework, is like, if I go down that road, then what impact am I going to see and how will I know? But then also go, if I spend that dollar on that expense, can I also structure how that dollar's actually building an asset in the business if the money has to stay in the business? Because then it's like, okay, I'm going to train this employee, but what systems are in place to make it more asset based, which means that I don't have to like be the trainer the next time. I'm documenting, I'm making a system, I'm making a standard operating procedure. Like I'm building assets every time I do that type of thing, which is two uses of the same dollar. I'm creating the expense, but I'm building an asset with that money, right? So there's like, that's one you want to think about, because some of these business owners were like, oh, I'm going to all my money stuck in retained earnings, and then it's there, but like, okay, well, what do I do with it? Okay, I'm going to invest passively over here in the business. And so then it's like, okay, you could do that road. You could go down that pathway. It's like, okay, I'm going to use the machine. The machine is going to generate income. The machine is going to generate retained earnings. And every dollar I'm going to put over here, that's going to be all of a sudden passive, and it's going to grow over on this side inside my corporate structure. But then what you've been missing this whole time is actually restructuring inside the business to make it saleable. Like, did I build assets, or was I just building this asset outside over here? And ideally, you want to do both, right? Ideally, that's where the two uses come from. Can I build assets inside my business so that it's not relying on me, it's not relying on systems, this machine operates without us, and then all of a sudden I'm building the asset over here at the same time, and then I can transition over to this machine on this side that just continually spits out money. We talked about that as that flywheel effect in previous episodes.
Absolutely. That's the vision I had in my mind, is like, your business, we want to generate a flywheel, but then with your investments, we want to generate a flywheel. So if you're a business owner, you actually want both flywheels to support one another. Right. And there are tools and ways that we can do that. We're not going to dig into that here today on today's episode, but this idea that the money we're generating from this business, this flywheel, I get it. There's going to be early on in the process, you need to keep funding and you need to keep doing things to get this flywheel going. But once that flywheel is going, we have to be strategic about taking some of that profit without slowing down that flywheel to start this other flywheel, which is my investing flywheel. And that will give me so much more control and clarity when it does come time where I might want to exit my business, as to whether, do I have to sell this business? Is it easier for me to just wind this thing up? Is it something that I just want to pass on to someone and take some dividends from by just selling a portion of the business? So there's so many ways that we can go here. But what often happens is we just get this one flywheel going, and it's you at the bottom, like pushing it along just to keep it going. And what we want to see people doing is generating both flywheels, get them working independently. And then when you get there, it's just like financial freedom on any level. When you get there, you get to decide what makes sense for you, instead of having to try to get a certain amount of money because it's your only investment plan for the rest of your financial future.
Here's, in summary, we've talked about, the four pieces. We only really touched on the parallels between two of the pieces, but I feel like this comment, or this line, summarizes your main takeaway here today, which is like, in both your personal wealth creation and planning system, your business wealth creation and planning system, or whether it's the parallel we're talking about here, that we were taking away from the seminar on private equity investment for sale or for buying businesses. The real value of your business, or let's say your personal wealth creation system, your financial freedom, isn't just in the revenue. It isn't just in the amount of your pile. That's not it. The real value of the business and your pile is in the systems that generate that revenue or generate that pile. That's where the real value actually lies. And so when businesses have those systems in place that generate, that's why you get multiple times the value of your business than ones without. Inside our personal systems as well, that's true. Like, this is the way I've been thinking about it lately, is that because we're establishing vision, corporate and personal wealth reservoirs, because we're establishing and optimizing and learning about structures that actually help us get there faster, because we're doing legacy planning and thinking about that actually, like, is the value of the system there is generational. And I think why I say that is because when you know that and then you can share that information, you're creating generational wealth. That's where it's the value actually lies, is in the systems, and that you're sharing those systems across the people that you love, the people that you can connect with on the personal side. Obviously, in the business side, when you create those systems, you're passing it on to the next owner. But that's where the real value lies when you do this type of work. So today we talked about those 4 stages. And if you want to know more about those stages, if you want to kind of get your assessment on where you are on those 4 stages, we've built a customized assessment, wealth and planning assessment tool. You can head on over to canadianwealthsecrets.com/pathways. Fill out that assessment. What we're going to do is you'll get your score on each of the 4 stages. You also get a custom report that gives you next steps, what your immediate next steps should be on the 4 stages, so that you can take action and get this system operational, get the systems flowing. Thanks for listening, everybody. Just as a reminder, the content you heard here today is for informational purposes only. You should not construe any such information or the material as legal, tax, investment, financial, or other advice. Kyle Pierce is a licensed life and accident and sickness insurance agent and the president of corporate wealth management with Canadian Wealth Secrets. Take care.